Okay, we have a report for you today, and that is going to be a new chart called the BTC dominance chart. Now, you've saw me look at this in the past, and I didn't really know how to fully interpret the data regarding the dominance chart for BTC.D. Lisa sent me something the other day that confirmed what I was doing with USDT.D, because I never do research about USDT.D. This is what I interpret. I've interpreted USDT.D and aligned with the market and the direction, and I'm pretty good at it. And my prevailing thought was USDT is Tether. It's a stable coin. It represents a cash position. In other words, when people that chart is going up, that means people have a sentiment towards cash position. And in economics, when people are moving into cash and hoarding cash, that means they're less adverse to risk. It means they're not trading, they're not investing, they're not buying stuff, they're not contributing to the economy. They all hoard. And generally that's bad for the markets. That usually means markets are going to fall because if the money, especially in our fiat system, currency more so even than gold markets, if money is not flowing, then markets shut down. Okay, entire economy shut down when money is not flowing. It's like a lot like water. Okay, we need water to be fresh, but for it to be fresh, it cannot be stagnant. It has to keep flowing. As long as it's flowing, it's constantly purifying, remineralizing, cleansing the earth, becoming structurally sound. And if you know about water structure, you know what I'm talking about. It's contributing to your health. When water's just sitting, it's bad. Even just leave water that you've washed from your own sponges with soap and water, leave that on your counter when it's not dried out, and it will start stinking really bad. Clothes, we had some clothes that we forgot to take out of the bag, and we remembered that we were in a time crunch, so we left the laundromat and they were still a little bit damp. We opened the bag a few weeks later because we're like, where's my shirt? And we opened a small bag of clothes that still had some water in it. And because the water never stripped out, and they smelled really bad. We're like, oh, now we have to wash them all over again. And we had to let them air dry. So the flow of USDT.D represents that cash position. It represents people's risk adversement. And that's one side of the coin. We use our USDT.D chart to determine the direction of the market. It helps us understand when that chart is becoming stronger or moving upwards, the market is in a position where this is negative. And when that chart is moving downward, we can start viewing this chart as a position that is bullish for the market. In November, we were watching this line very carefully. And I said to us in November, and you guys remember I did a public report in November and in December saying how this area around Thanksgiving is actually a bullish area for crypto. Crypto has this ability to start doing some bullish things. And this was the start of some of that bullishness for cryptos. Now, over time, we've been playing this out very carefully. So don't worry, I'm going to get to the Bitcoin dominance in just a moment, but I want you to understand how the dominance chart plays out. If we can predict this chart, and we can predict the sentiment of the market, then we can start understanding which direction the markets are going and which side of the coin we are on. The average person, the average Joe, doesn't know a lot, which is what's happening in the market. But when we can read the overall sentiment of the cash market, or how people are feeling when it comes to hoarding, we can have a better understanding about which direction the market's going. In cryptocurrency, we primarily don't trade with cash. Nobody trades with cash. It's very rare. Most of you guys don't trade with cash. We trade with something called stablecoins. So if you're new to the markets, we trade with something called stablecoins, which is we fund our account with cash and then we convert that into one of the trading coins, such as USDC, USDT, UST back in the day. A lot of people were doing that. A lot of these stable coins are one-on-one for the dollar. So generally they don't move, and there's slight movements, but for the most part they're pegged to the dollar. So whatever the dollars equals, that's what these stable coins generally represent. They don't really move. And there's a few of them, but by and far Tether is the most powerful. Now, one day Tether will crash and it will go away because there's not really any, they haven't subjected themselves to audit. They failed the audit when they did do an audit 6 years ago, and they've refused to do an audit ever since. Something's not right, and that's a great can of worms. But for the most part, for its function, for its utility, there's still trillions of dollars in Tether, and people are still putting money into these Tether. So when we can see the sentiment changing in slow motion, we start thinking to ourselves, this is supposed to be going down. Okay. When we start seeing the round structure, especially if we know where to look, over the months we've been watching this line with great ease. We had our first weakness here. And then we started building underneath here. And even to this very day, we're still underneath that line. We're still getting squashed exactly where we should. The sentiment is that this is telling us the market, this crypto is going down. People are going to be exiting their cash position and moving into cryptos. They're more adverse to risk. They're more prone to try to take risky things because they're leaving the cash market. So the Bitcoins of the world, the markets, the heavy markets, especially the larger cap markets, are going to have an easier time moving up. And so we need to watch this chart with very carefully. Now, we've already done that. We do that every single week. We watch this chart with great extent. We even know the next moves to look out for in our community, and we denoted it along this pink line. We even calculated just recently how far we should have gone up before that starts changing, and it's here at 4.7 to 4.62 by and far. Now, we spiked up to these higher levels, but even those higher levels, we could calculate where those are at. So on a daily chart, it looks something like this. Now, again, don't worry, I'm going to get into Bitcoin dominance, but if you're watching this report or clip on YouTube, you need to see this, okay? So we start knowing where many of these things are starting to change. So where the game is supposed to take next, if we're bouncing along this track, the game should change around these prices, okay? Now, it is in my opinion, I told everybody about a week ago, we should be playing up here for about the next 2 weeks. So I'm not really expecting this to go down super fast right now, but I'm letting you know the seasons that we're in. When this comes down, we still have a chance to come back and play. But these are going to be the next big important places for you to watch. 4.77 to 0.62. And then the next big weakness is going to be underneath this block, and it's around 4.8. Now, each week this number goes a little bit higher and higher as we're coming. But I'm primarily looking for that weakness around 4.8. And that's going to let us know when we see prices building under here, we're going to be seeing another bull market. And then from here, based on a dream, I'm looking for us to come up on one side or the other. But we're looking for this to be bullish for cryptos when we're rejecting in these areas. Even if we have a bad day and come up a little higher, I'm looking for us to reject in these areas. The other area, if things go really sour, is 5.55. So you guys can have that. And on our website, you can have a screenshot already saved. Just type in USDT.D. on our recent post. So all of you guys need to know how this kind of works. Otherwise, just take a screenshot just right now if you're watching this. So there's a general flow of price, and the flow of price is telling us it wants to change in these areas. So once we start coming to these areas, especially being underneath, we start coming to these areas where there's lots of reasons for prices to change. And this is what we call a vortex. Vortex are like a little whirlpool where all the resistance seems to come at once. And when price sits in those pockets, it's a very likely we're going to bounce because it comes to these areas exactly where all of the supports are coming. The support from here, the resistance from here, the resistance from here, and the resistance from our target. And price sits in those pockets. We're looking to bounce out of those. That's generally the thing that we're looking for to happen at those areas. So this kind of helps us understand, should we be bullish, should we be bearish? Now, USDT.D is telling us we should be bullish, because when this chart comes down, your cryptos are primarily moving up. And if all you read and understood this was in the larger game, like on the monthly time frame, you're going to stack the odds in your favor. If all you ever did was look at the monthly time frame and you can understand, hey, what's actually happening here? What is the reasons and where we're going? If you understand we're supposed to be going here anyway to the bottom yellow because that's been our support for years. If that's been our support for years, or our phantom for years, and based on the phantom, we can calculate the key angle, and it's telling us we should be going to some lower areas, which means we should still be looking to be bullish. And then you look for those signs that this is still weak, and those building underneath this area is telling us we're still weak, which means the markets are strong. People are leaving cash and they're trying to start investing in cryptos, and this is telling us when we need to look. We also know it's in these areas where we're looking to take profit, and those areas are around 3.58 to 3.3. Now, I had a dream that we actually go lower than that number, and when we come out of that number, we shoot out really high. And that's going to be a bad moment for cryptos. It could be a flash crash. It could just be a bad moment for cryptos. We don't know, but we're looking to get somewhere down here, and this hasn't changed. The game has not changed since I told you in November, and since I've been telling you over the past few years about this chart, showing you how to read this chart over the years to calculate some of those weaknesses. And we were some of the first, just to remind you guys, we were the first ones to start showing you when those weaknesses happen. We knew to be bullish cryptos because of this chart. We knew it. We were ahead of the game. When we had this and we were going up, we had 2 weeks to be bullish. And we knew that it was going to be a very bullish time for the markets when this was coming down. And we were right. We positioned ourselves quite nicely. So if you're watching this, before we get into the next section, you want to come to our website, patreon.com/jsong_7. You can even sign up as a $1 member and get access to our meeting once a month. Otherwise, just show up. You can show up on our website, patreon.com/jsong_7, and get copies of every single one of my videos. If you ever see a crypto that's important to you, you can just type that in, or even click on that daily video in Melody. My wife timestamps all those videos, so you can just go to your favorite part. So if it ever seems like it's a long video, it's because our meetings are jam-packed with content. So see the video explanations for all your favorite cryptos, and you can see my take and opinion about the flow of price based on our art called the sword method. All right. Now, when we are in here, we're looking to go down. So now let's talk about this. Now, it's nice to have one crypto that tells us, or a type of index, as it were, an indicator, as it were, for the entire market. But it's just one indication. Now, there is one more that deals with this, and Lisa so beautifully sent me this the other day. And I want to read it to you. She sent me this regarding the dominance chart, and I thought, man, that perfectly confirms what we should be, how to read this. And she sent me this and asking questions of ChatGPT. Oh, too many things she sent me. Hold on. Lisa, stop sending me so many stuff. I'm just kidding. She sent me this, and I'm going to read this to you regarding dominance charts. Understanding dominance charts. As she says, I wanted to better understand USDT.D chart percentage and thought this ChatGPT answer would be so helpful. As of February 2025, the cryptocurrency market's total capitalization stands at approximately $3.36 trillion. Bitcoin holds a market cap of around $193 trillion, representing a dominance of 57.54%. Stablecoins collectively account of 6.96% of the total market cap. So if we're talking about all the money that's flowing in cryptocurrencies in and out, stablecoins make up 6.69%. Within the stablecoin sector, Tether comprises of approximately 4.4% of that, of the entire market. And USD coin, which is USDC, holds about 2.5%. So the winner is Tether. So if we get a good idea of what the flow of Tether is, we can understand how much money is flowing into cash, how people feel about the markets, and therefore, if we can predict that, we can predict the market in a big way. So again, that's why we use USDT.D over the years. Now, I'm going to show you a little bit more. The remaining 35% of the market capitalization is distributed among various coins, including Ethereum, XRP, and numerous other cryptocurrencies. Understanding dominance charts. Dominance charts depict the percentage share of the total cryptocurrency market capitalization that each asset or category holds. The charts assist investors in addressing the relative market strength and share of different cryptocurrencies. Now, this is where it's going to talk about. So let me show you these two parts, and then I'm going to go into the dominance of Bitcoin so you can understand. So at the top, at the little side here of the market, you're going to see a percentage. This says 4.5% with 6 days and 7 hours left to go in this candle's close. Okay, this is 1W, so that means that there's 1 week that is happening in this time frame, and you're going to see that the numbers go up 5.4, 5.6, 5.7. Right now it has 4.5% of the total market. So if this is going up and it has 90%, that 90% of the people or of the money is basically not bullish the market. We're out of the market. We're in stable coins. Now, this is what it says regarding dominance in USDC and USDT. Increasing stablecoin dominance reflects a move towards stablecoins, indicating risk-averse sentiment and potential market downturn. So when we see that dominance chart increasing, people are not wanting to invest. And when we see a decrease in stablecoin dominance, it suggests investors are reallocating funds from stablecoins into more volatile assets. Meaning they're wanting to invest more. Assets like Bitcoin and altcoins implying increasing market confidence. They feel good about the markets. So this is why we can use the dominance chart to our advantage. Now, this is where this caught me, and I thought to take a look at a new dominance chart that I haven't really looked at in a while, and I didn't really understand it all back then when I was first doing it, but now we do. Bitcoin dominance BTC.D. Increasing Bitcoin dominance suggests a stronger investment preference for Bitcoin over altcoins, potentially indicating a bearish trend for altcoins. Which means that Bitcoin, and not just for altcoins, but that Bitcoin is having a bigger percentage of the market. So if Bitcoin is having a bigger percentage of the market, not just Bitcoin itself, what it's doing as a Bitcoin, but as compared to the entire market, is Bitcoin taking a fair share of moving up? Is it moving higher? Is it moving lower in comparison to the overall sentiment? This is going to be reflected in Bitcoin dominance. Now, the next one, it says decreasing dominance may signal a shift in capital to altcoins, often referred to as altcoin season, where altcoins outperform Bitcoin. Yes, but it can also represent a decrease in the overall sentiment towards crypto. Now, the reason I'm saying Bitcoin represents crypto is because by far, Bitcoin has the largest share of cryptocurrencies. It's the dinosaur, it's old technology, but it still has a lot of sentiment. So when people who don't know about cryptocurrency, all the people the millions of people who have 401ks and all this stuff who are about to come into these EFTs, and which are basically a way for them to invest in some of these things. Ask your grandma, ask your mother, hey, what's cryptocurrency? And they go, oh, you mean that Bitcoin stuff? That's a response you'll get across the board. Otherwise, they'll look at you with a blank stare. Ask somebody, hey, you know about XRP? They'll look at you blankly. Say, hey, do you know about Bitcoin? They're like, oh, yeah, I know about that's a crypto stuff. It's the same response across the board. Just walk down the street. So Bitcoin is the branding of cryptocurrency. If you understand Bitcoin, and you understand its dominance, it's going to help confirm that the sentiment of the market. So let's do that today for just a few minutes. I'm going to show you this new chart called the BTC.D and how we're going to incorporate it. We're going to be looking for this chart to move up and into health. And I'm going to show you some of the things that I found about this chart. Here's a look at BTC dominance. Now we look at this one in logarithmic. We always look at it in logarithmic on our site as to not be skewed by the United States dollar. Here are some of the things we saw, and I'm going to point out just a few of these things. Number one, this is a weekly chart. That means that each one of these weeks, each one of these bars represents 1 week worth of time. As we zoom out to understand what's really happening overall, we can start seeing a few things, such as we can see some of the foundational areas. We can see that there's some angles we should be wary of. We can actually see also the whole entire move in its entirety, knowing that these areas are important. So for right now, let's draw these areas as important. Okay, so we know those areas are important. The next areas that we can see is we see a really strong up move in as far as a peak goes back around December of 2020. So that was years ago. Back here, by the way, to give you a time frame, this is February of 2017. So this is years in the making. And if we can understand some of these things years in the making, it can help us position ourselves for something good. Now, over the years, we can see that when we bring these down to these areas, let me turn on a monthly chart, by the way, since there's so many candles. Okay. When we look at these things over the years, we can actually see that a health first revealed itself somewhere here in May of 2024. This was a big change in the market. This was a good thing. When price entered this side, and generally we denote these by putting a little circle here, but I haven't been looking at this chart, so I can't really show you that. But this is the health. We'll draw a little circle that's colored green to know that when we start seeing the game changing. The next health would have been when we're on this side, and that is based on the wick side. Okay, so if I'm drawing this from just the cores or the meat of the matter, it's going to be around this angle, okay, somewhere around there. And the wick side is going to be somewhere around here. So this is going to be one health, and this is going to be another health. Now you're going to notice something very, very interesting when I show up the volume, just by looking at these two areas. Number one, you're going to see that there's heavy volume on these days. And this is what we talk about in our community in sword method, where we're discussing something called pushing volume and sustaining volume. Now, this is a new concept for many people because many people talk about volume in terms of flats only. But because we use volume along with our angles that we draw so much of in sword method, we can view these things in a very different light. The buying has to happen on down moves when professionals are buying. And we can see that there's a heavy volume on this bar of March of 2024. There's a reason there's a heavy volume in that bar. It's because there's a lot of activity that has changed hand. This is when the people start feeling safer to enter this crypto. This is when the market sentiment is changing, and they know it, so we start seeing a lot of influx coming in. This is what we call sustaining volume. It's money to keep us on the right side rather than coming back down into weakness and rejecting. It's money to sustain us or to keep us happy. In other words, to keep us in, as other VSA teachers might teach, in elation. The very fact that we see this type of volume that keeps us or sustains us at that high level is what I call sustaining volume. It's to keep us happy. It's like the casino effect. When you go into this casino, you're losing, you're like, oh man, I keep losing, I just want to break even. And then all of a sudden you have this very big win. The casino will sometimes you'll feel incentivized to stay longer. And sometimes when you're winning too much, even the casino itself will play into this. The market itself will also do the same thing. You'll see the casino do things like to you, like saying, hey, we'll give you a perk, we'll give you a free hotel, we'll give you a free lobster dinner. Stay, because they know that if you play the game long enough, you're eventually going to lose. And so this is the market throwing money to keep it a positive. Those are different ways we can view this. The market itself helping sustain, the sentiment of people helping us to sustain, and either way the move is telling us one thing. No matter how we read it or in which ways we interpret it, we can view one thing. This is on purpose. Okay, so when you think about sustaining or pushing volume that we teach about in our lessons 1 through 17, on our website, by the way, you can find our lessons 1 through 17. Just type in lessons on our search bar. If you guys are a Dive Tier member, you'll have access to all of those. Either way, when it comes to these things, you know that the move is on purpose. Okay, so always look at these kinds of things to see what is the purpose. Is this on purpose? And yes, this is on purpose. The next time we see this effect, it's here after the fact. We have a prices coming up here, and then all the trading is on the down move. But you can notice again, the down move is up to the side and up. Okay, this is money coming in after the fact. So this is another what we call sustaining volume. So if we were wanting to mark this on our chart, we can see that and interpret that these moves are on purpose. So this is where I would put in the micro volume view, I would put sustaining. Okay. The pushing volume is generally when we see the big push through, and the sustaining is when we see high volume on the down bar after the fact in a move of health. So that's a little bit advanced, but I just want you to let you know. In other words, the big takeaway is this is on purpose, sustaining. And when we see moves that are on purpose, it gives us confidence that we're supposed to be looking for higher prices. We're supposed to be looking for those markets to move higher. Does that make sense? Okay, so when we see that type of volume, it lets us know we are looking to be bullish. Now, this is a monthly chart. This is playing out over the next few years, but over the next few years, or possibly just a few months, by the way, it can happen real quick. But I'm just letting you know, whether it's over months or over years, this is a good spot for Bitcoin to be. It means that the market sentiment has told us that they're looking for Bitcoin to be higher and reach some higher prices. Now, there's one more danger I'm going to show you, okay, and we're going to look at that, and this is our foundational areas. I want to just draw that one. And it's an angle approximately here, okay? And we're going to collect those two tops from here to here and see if I can collect all of them. And that's about the angle. All right. So I'm going to duplicate this angle. And this is going to be somewhere out in the future that we don't really have to think about so much right now, but we're at this moment, but at the end of this video, you're gonna see. So let's take a few more moments and let's just borrow this one and just stretch it out so we have a single angle. Good, and now we can delete these. Okay, so this is going to be what I generally refer to as a watch line, and it's going to be something we're going to be watching out. Now, if prices move higher from these areas and they start moving up, we're going to be looking for prices to resist somewhere underneath here, and if prices break above, we're going to be looking at that as a good behavior. But until then, we're going to be looking for this to change here. So that means that over the next few years, just say over the next few years, you start seeing Bitcoin going up, or just say it happens all this summer and it's the summer of great expectations, and we start seeing Bitcoin go through the roof. You better be darn sure that I'm going to be paying attention to this chart to see when that is supposed to change. Because markets can't go up forever. Generally, they don't go up forever. But this is going to be my big indication of when I'm going to be looking for things to be dangerous. And I can calculate that area in advance using this chart. And I'm going to show you more reasons on why we're looking at this chart and these areas. Now, I'm going to tell you the percentage before we hit it. The same way that I calculated USDT.D to great degree over the years, I'm calculating this chart over the years to let me know when it's time to take profit. You understand? If you're in this crypto, you're going to be needing to remember this chart or remember these numbers, or at least have me in your corner to at least remind you of when you're going to start looking for this to come down. Now, everything in this video is never financial investment or trading advice of any kind. I'm just kidding. This is all just for comedic purposes only, never to be taken seriously at all. It's just for entertainment purposes only. I eat red crayons for breakfast. I know Pastor Keith said he eats now blue crayons for breakfast. This is going to be something. Now, let's continue. With that said, let's continue on with this. And so you guys can tell me if this makes sense or not. But I've been reading the flow of price of charts for a number of years, and I'm getting pretty good at understanding these areas well in advance, and let me show you some more things. All right, so that's going to be number one. I would recommend taking a screenshot right now and keeping that in your notes or your folders. This is a danger area, okay? This is where we're going to be looking for prices to do one of two things. We're going to be looking for it to come down, or we're going to go up, okay? So it's going to either break above and build above these areas, and we're going to see some much higher Bitcoin, or this is where people are going to be taking profit based on the calculations, because these are these strong holders, and this is the area, and I can tell you that emphatically, this is the area where they're supposed to take profit. So if you see a big push through that area on high volume and on the downside, you're going to know that, hey, we're going to be looking for prices to come up. But this is where we're going to be looking for more pushing or sustaining volume, such as we had here and here. Okay, so this is going to be how we're going to look for this. Now, let me show you a few more reasons on why I want to be bullish the market. Okay, number one, let's go back to our weekly chart. Okay. Number one, we have it's a 2-week chart or monthly chart? Yeah, monthly chart. All right, there it is, monthly chart. Now, we're going to draw and calculate these two energy centers. You guys who are in my community, I love round structure. One of my first videos I wrote is why we love and need round structure, okay? This round structure connected to this peak as energy centers. This is the center of this energy. This is the center of this energy. So we call these energy centers. Okay, and these are the areas we're going to be drawing and connecting together. This is what we create as a key angle. Okay, so this is going to be what we know as a key angle. I'm giving you all my secrets. Okay, guys, if you guys want more, come to my website and you can join our community. All right, now this we're going to call key angle, and I'm going to write down the word here on this bar, monthly. Okay, monthly. All right, so monthly, we know that this is going to be a key angle along the monthly chart. Once we have this angle, we can duplicate this angle, and we're going to bring it to the top energy center. The top energy center is up here. Okay, that's the center of energy there. And we call this a phantom because this is a ghost angle. Most people cannot calculate anything along this angle because they don't know that angle in advance. But here's what we can find. When we place it here in this area, we actually get something called verification. So remember, I placed it here I already drew the angle. I know what angle. Sometimes the angle's flat. Sometimes it's really severe. In this case, it's slightly at an upward angle, but we call it a phantom angle, okay, because it's in a ghost angle. And when I placed it here, it gives me a resistance here in January of 2021. How did we know this? We didn't have to draw the angle from here to here. We can draw it here to here. Now, price can be verified forward or backwards. So if you drew it from here as your key angle, then it's going to be revealed that this is your support. In this case, it's a little backwards because we would have had this area first. But these areas always speak to each other. So whether you're drawing this one up here, it speaks to this area as a verification. And if you're drawing this one, it speaks to this area as a verification. They're interchangeable, and we can read price forward or backwards. Okay, in this case, for purposes of just this demonstration, we're going to say this was our monthly key angle and this was here. Otherwise, this is your monthly key angle and your phantom is down here. Okay, in the phantom, we put this word that says with a PA. Okay, oops. And here. Now, if we're being super official, our key angle is going to be somewhere along there, and this is going to be our verification down here. But either way, we have proof or reasons why we're believing that this is the oscillation. Now, what do we mean by oscillation? We mean that price is moving back and forth in this area. And that tells us where our bottoms are. We can calculate the bottom easily because we have the angles that we verified. So we now know where a more likelihood, not that we're guaranteed anything in the markets, we're never guaranteed anything, but we can start calculating in advance where our bottoms are supposed to be. And again, I always say, if you don't know where your bottom is, just put your hands up like that, then move them to the side and slap your booty. That's where your bottom is at. In this case, it's 41%. This is another important number. If the markets go really down and there's a flash crash or something, and people are wanting to know when they're probably going to get back in, it's most likely there at 41%. And this is dynamic positive. What that means is that over the years or over time, this number is going to go up higher and higher as time goes on and on. So if it happens in January of 2029, the number is 42%. If it happening sometime at the end of this year, in December 2025, it's 41.94%. It's nice to have these numbers so you know where the flash crashes may find us or where stuff should be recovering. And if further weaknesses are revealing themselves, it's great to know those in advance as well, right? So if I'm seeing price building underneath here, I'm going to be looking that the market's going to fall even more. So when your coworkers or your buddies saying, oh man, I don't know if I should dump my crypto, and they buy it, they dump all their crypto and it's at the very bottom and it goes up, they're like, oh man, why did I sell? People make those mistakes because they don't know where these bottoms are in advance. If you know where them are in advance, years in advance, it's great, right? Again, take a screenshot if you don't already have one. All right, we're left with health. We're left with health, a big health, okay, another health, and we have a top, and we can calculate where that top is, and oh, would you look at this? We can see that around 78 to 79, it's telling us that these are the top. So we can see that if price plays up, we now have what is another vortex with these areas where, as we talked about in USDT.D, these areas where there's multiple reasons that price would be rejected. In fact, if price does break above, it's a really positive thing. It must have been on purpose. But these are higher chances or likelihood areas where you're going to see prices reject that. So this is why we really pay attention to vortexes. And we now have our first vortex in Bitcoin dominance. All right, so are you still paying attention? Our content, our videos are packed with jam-packed content, but I try to keep them short, but I make sure you guys have plenty of my hard work and effort for you guys. I love you guys. I want you guys to know about some of the biggest changes that are happening in the market. All right, another thing we're going to pay attention to regarding these things, and I'm going to pull this back up, is when I look at this on a weekly chart, I have something called parabolic oscillation. So now if I'm gauging these areas in advance, we have a few things. We have a move up with weakness. There's our sword cut. Price should be rejecting at those two areas, and it did quite nicely. Now, when I look at the full move in its entirety, I'm left with this shape. It's a parabolic shape. To confirm that shape is more accurate, what I can do is I can duplicate that angle and I can bring it up to our top areas. And I look for something called verification as well. Okay, so if I bring it up to the higher energy centers, such as here, I can see that I hit it here and I hit it here. Again, I have this curve, not this one. So if I draw this one as my key angle, my phantom and I place it here, this is telling me, Song, you're doing this right. Your oscillation is here. Now, these parabolics don't go all the way circle. They level out. Okay, I teach this all the time. They level out. Once they start curving, they become a flat. And would you look at this, another verification as we come flat. Here, in this case, around January 2020. Now, these are things we could have caught in advance. It's nice to see them when we can catch them, but we can review it forward and backwards. So now we know, again, where a bottom is at. It would be nice to know when Bitcoin's supposed to be moving up, and we also know where the top is. Wouldn't it be nice to start knowing when Bitcoin's the market sentiment is changing? And when we would like to know if we're at risk of buying at the top of a market, such as here or here. It'd be nice, right? With some of these techniques, you guys can catch some of these things. So we teach this all the time in our lessons 1 through 17, or you guys can just show up and weekly we talk about these. So for as long as God has me here, God willing, I'll be continuing to share with you many of this information. Patreon.com/jsong_7. All right, now it also tells us when weakness is entering the market. If I'm here, I need to calculate my next resistance or shortcut when things should get a little bit sticky or problematic for me. In that case, weakness appeared to me approximately right here at this area. This is when things started going sour. This is when people are going to be like, oh, I lost money. I just want my money back. And if markets do go up, they're going to be taking profit along this track. This is what we call a shortcut. On the underside of this area where the weakness appears, it's here. And this is where primarily the market should get a little bit sticky. Now, we saw this, and here's the thing. This is where they should have taken profit. Instead, we see the market come up, come down, and come back up. This is what we know as a shakeout. And when we see shakeouts, generally, a shakeout is a continuation indicator. We talked about this today with a certain crypto. This is another crypto or another indication that the markets are going to continue the direction that they went before. So when you see shakeouts at the top of a market, yet the move is still in health, it's a really good sign that you're going to be continuing going up. So this is where they should have changed. But if it's not, then this move is on purpose, especially when we see high volume moves trying to help push it past there. This is to take out stop losses on both sides. So this is generally a manufactured maneuver, and this is something that's a type of manipulation. I like manipulation that I can read. This is one of those types. All right. So in this case, we're going to fade away the shortcut because this is where there should have been profit, and instead we see an indication that markets are going to continue up. So more reasons to be healthy. Okay. So if we're writing our report real quick, we can see a few things. Let's just add some of this. There are strong reasons to expect BTC.D to move higher. This includes 2 moves into health and a shakeout into health where there should have been resistance. This is a continuation type of indication. Okay, and this is going to mean that the market's going to continue moving higher. All right, so that's something we want to just keep off to the side of our notes. Now, there's another thing. Let's look at this a little bit further. When we measure, the top parabolic also is going to level out along this track. Okay, just same way that the flat will level out, or the shortcut break would be here. The flat levels out here. This is where we level out next. Pay attention real quick. It's here at this area. Okay, in this range is where this parabolic curve levels out. So again, it leveled out here, and price is now shaking out onto the top side. Continuation. It also levels out up here. But do we remember this area again? This area is still the same areas of where all of our upper resistance is. So now we have our angle here, we have an angle here, we have an angle here. It's all telling us this is the congestion. So if price comes here, I'm going to be looking for markets to crash, or I'm going to be looking for things to come down. I'm going to be looking for rejection to happen. This is where I'm going to be looking to take some major profit. Now I got one more for you on this chart. We have a technique called target system. Target system helps us identify bottoms and tops months in advance, sometimes weeks in advance, and it really depends on what time level you're applying it to. But when I applied this measurement, this technique called target system, which I won't show you here, I will just you come to our website, you guys can see the whole lesson on it. But I want to show you when we applied target system, there was supposed to be a resistance here along this area. So when price instead decided to break above and sit on this area, we knew that it was most likely going to be continuing going higher, even if there was resistance here. Wouldn't it be nice to start knowing the little clues that tells us when we're most likely going to break out or most likely going to come back down? Sometimes the market's revealing a lot of information that the average person doesn't know how to catch because they don't know how to read some of the flow of price, the technical analysis side of it. We're here on our website, patreon.com, to help you understand how to read some of these things so that you're not at the mercy of the market gurus or the Bitcoin t-shirt wearers or even just prophetic people only. I love prophetic information, but Prophet Robin said, hey, I don't know timing. If you want timing, go to JSON. And we love prophetic. We combine prophetic all the time. We look for prophetic. We even mark little prophetic boxes all the time about lots of favorite cryptos. But it's nice to have some visual cues, right, to start knowing in advance where those prophetic numbers match up. I can't tell you how many times our prophetic numbers match up with some of the members, the prophetic people in our community. I don't like to be at the mercy of just prophetic. We've heard prophetic stuff about dinar for years, but it's been years, right? 14 years that people started speaking prophetically about dinar, and they know that things are going to happen. I believe it's going to happen. I may not know the timing, and the prophetic people may not know the timing. The Bible says we hear in part, we see in part, we prophesy in part, but then we'll know fully, even as we have fully known, which means as it is now, we only have pieces. I only have pieces, but we need the body of Christ, and that helps paint a picture more better. And many people in our VIP community are getting pretty good at drawing these charts. I'm really happy for you guys. Here is an indication that things are changing for the bottom, for the better. So there's another health that was here. Now let me show you this. Our next target is up here. When I did target system, it's up here. Oh my gosh, it just, do you see? And we love sword method because what happens in sword method is we can start almost in any direction with our art, and it starts painting the same picture over and over again. And in this case, it's painting a resistance here since we're on the underside. Okay, so if we're here, we got 1 resistance, 2 resistance, we got 3 resistance, 4 resistance. Do you see a pattern emerging? My friends, when we're here, we're probably going to be getting there because of the health. Now, it may happen now, it may happen over the next few years, but in other words, I'm going to be looking here. And you know what else I'm going to be looking for? To get out. It's nice to know in advance when we're going to be looking to start seeing the game change. So I want you guys to just keep in mind some of these numbers. I'll put them on my chart. You can recreate some of these things on your own maps. And I hope this video has been a blessing to you. Remember, it's never financial investment or trading advice of any kind, just for entertainment and comedic purposes only. Here's one last look at the chart. And you guys can take that screenshot. Don't forget to take a look at our website and make sure that you have a reference in case you need to find me in the future on our website. We love to help you guys. All right, and that's going to conclude all of our videos for today, all of our markets for today. Usually after 2 hours from our live session, which we're in right now, thank you everybody who's showing up for our live session on Zoom. We give you an invite within 10 minutes before the meeting starts. We read the Bible before every one of our sessions. And we would love to share with you guys these cryptos for today, as well as all the cryptos we did on Saturday and on Wednesday. Wednesdays are reserved for our tutorials. So if you guys are new to our community, we usually slow things down more on Wednesday, ask questions, make sure that you guys are getting a full understanding of what's going on, and give you a chance to practice your art along with us. We love you guys. God bless you.